Welcome to the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip people to invest wisely in both properties and residents so that together we can build wealth while improving housing. I'm James, and this is my wife, Jessie.
Hey, I found something that I like to build with Legos.
Really?
Bugs.
Bugs, huh?
I love my gift.
Dude,
I love it.
that's awesome.
So yeah, you guys brought me back some bugs from Legoland.
Yeah. What are the three bugs?
Okay, there's a praying mantis. That's my favorite
What's
one.
your favorite?
A butterfly, a blue morpho butterfly, and a Hercules beetle.
Ooh, cool.
That one's kind of cool because you can flap the little wings and take them off. You can close the shell. That's awesome. Kind of interactive.
Cool.
I just moved them to my office today, but I already find that when I walk in and out of my office, I always want to like reposition the little arms so that it's like moving.
Yeah, kind of like Elf on a Shelf-esque.
Yeah, a little bit.
That's funny. Well, if you're watching a video of this, somewhere in this frame is another Lego.
Ooh.
That was mine. It's probably super obvious.
Yeah.
But that's okay. That was my gift. And then awesome. I also got I got plants. That's the route that I went.
Yeah.
Plants.
Plants and bugs.
Good. Yeah. So it's fun. Yeah, that's kind of they figured out like that's another. Lego is a very interesting company to follow because you can clearly see where they go, oh, here's a customer segment, and they go in because they start making models. And so it's very, very clear what it is that they're focusing on.
Right.
In that sense, it's a very fun company to study because, they just have very obvious niches and marketing verticals or avatars. Avatars, that's the word I wanted.
Oh, for their customers.
Yeah. We're going after these people. So they figured out people.
Makes sense. I'm a bug person.
You're a bug person.
I would buy all the bugs.
Well, and the plants they're more adult-like because you're going to put them in your house and leave them there. And
right.
they're like, perfect. Oh, cool.
Yeah,
plants. I never have to...
You don't have to water.
Bugs. I never have to feed or
and yet
swat.
you still get to like play with Legos.
Yeah, exactly. Super fun.
As opposed to our son who bought a vehicle and it's like he puts it together, smashes it.
Hey,
half the pieces get mixed in with all the other Legos and
that's all right too.
Plays differently. It's a different target market.
Different target market.
Avatar.
Exactly. Avatar. Yeah.
He is the Smasher boy avatar.
Sure. Yeah. What are they? Usually when you do this in marketing, you come up with creative names for how they represent, and they're usually highly alliterative. So it might be like
Crusher Calvin.
Yeah, exactly. Crusher Calvin. Yeah. I love it. So, what's a good... So in the way that there are multiple different types of customers,
there you go.
There are also multiple different types of markets that you can invest in. And one of the things that you want to do as you are evaluating deals, whether you are active or passive, is you want to evaluate the market in which that deal is happening. Because it's kind of a tide lifts or lowers all boats situation.
Yeah.
And so ideally you want to be investing in, quote, healthy, vibrant markets and not ones that are not great markets, but those are very fuzzy terms.
Yeah.
And so part of that due diligence process, and I have an entire download that you can learn about the 196 questions that I ask that span all different areas, all the way from the sponsor to the deal itself to the surrounding market. And we've done these kind of episodes we've done a few of them. And so this is kind of the fourth one in that series. We're talking about the market itself. And so I've given you all the questions that I think someone should ask around the market. And so what I'd love for you to do is kind of read through them, comments, ask questions, and I can add a little bit more information behind them.
Before I jump into these questions, I glanced through them, and I think it kind of like, is this your point? Like, this whole section of questions will help you determine what is a healthy market?
Yes, correct.
Okay. All right. So like, as you don't define that ahead of time. I mean, there's general parameters.
Yeah.
So like, as we ask the questions, people will be like, oh, okay, I know what to look for.
Yeah.
Okay. That kind of makes sense to me. So some of these questions, one surrounding job growth over the last 5 years. So kind of what sectors of employment are there in the economy in this particular market, and does one section of the job market control more than 25% of the employment market? So like, what do jobs look like?
Yeah.
How are people making money?
Yeah, and ideally it's not all concentrated on a single industry, because let's say, for example, you're doing a whole bunch of timber stuff and
Yep.
you're in a town where they are all working for a lumber mill, and then a state like Oregon comes along and says, "Hey, we want to protect our timber," which totally makes sense. It's great, but all of a sudden the lumber production drops and everyone's out of a job.
Yeah.
And that 25% is kind of that magic number of, hey, do we have like a single industry town? Because nothing's 100%. Or are we well diversified where it can survive?
It could sustain.
I think there was a while where Corvallis was actually it was on rocky ground because HP was the biggest employer by far. I don't know if it was 25%, but like it was starting to knock up to that number. And then when HP started to lay off people and shrink in Corvallis, it had a material impact on Corvallis.
Yeah.
Now, thankfully, Corvallis also has a university, and then it had a hospital. It's kind of like those three are now the big ones, and it's more balanced, which I actually think it's a healthier economy than it used to be.
Interesting.
But yeah, that's something you want to look
Because
out for.
other jobs or industries kind of fill in. Is that
They have
how that
over time.
works?
Yeah,
Over time.
ideally, yeah. But again, depending on especially if you're looking at small cities, a sub 20,000, you really want to be careful of that, because again, if that employer is like, "Hey, we're done," like, dude, that could be a problem.
Yeah.
But yeah.
So is that I'm kind of thinking of like suburbs of bigger cities. Are you
Those are
looking at the
fine.
bigger city, or do you look at the more closer market?
I tend to look at the bigger one. Like, what's a reasonable distance for someone to drive?
Okay.
Right? I think
Yeah.
it's super reasonable for someone to drive half an hour.
Sure.
Probably even 45 minutes
Yeah.
to a job. And so I would look at that whole surrounding,
Okay.
that 45-minute circle, essentially.
That makes sense.
Yeah.
And then what has been the income growth over the last 5 years? What's the median income, and will tenants be able to afford to live there? In other words, is the income to rent ratio greater than 3 times?
Yeah, so this is actually, it's super interesting math that you can do. So first and foremost, you want incomes going up, because that, again, shows that it's healthy and people are doing well in their jobs. The companies themselves are doing well, so they'll pay their people more. Like, you want, that's just like things all moving in the same direction.
Sure.
By the way, the chances of finding a market where everything is up and to the right is not going to happen.
Yeah.
So you kind of got to pick and choose, where do I think my risk factors are? How big of a deal is this? So specifically, there's some math here. So when we're screening tenants, what is our income rule?
They have to make 3 times the amount of rent, the monthly rent,
Yeah.
in income.
So if rent is $1,000 a month,
They need to make at least 3,000.
yes. And so what's interesting is you can look at the median income for a city, and you can do the math for that.
Oh, okay.
Yeah. So let's just say, to make our lives super easy, if the median income is $60,000, do you know what that is if it's $120,000?
It's $1,000 a month.
No, it's $10,000 a month.
$10,000 a month.
So if it's $60,000 a year,
It's $5,000 a month.
there you go.
Okay.
So
There you go.
if rent's $1,000, are we okay?
Yep.
Yeah. So that's kind of the math.
Interesting.
Now, it's not to say like there's nothing hard and fast about that, because in theory, everyone who's above, a lot of people who are above it, they're having homes anyways. And what you really care about is more than likely that lower half.
Yeah.
But the closer you get to that just means there's even more people who can afford to live in my place.
Okay. So,
And I would say if your rents are, let's keep going with this $5,000 a month number, right? If you want your rents to be $2,000 a
that's
month.
where I was going next.
Yeah. If you are looking at a deal and they go, yeah, the median income for this place is $60,000 a year. Currently, rents are $1,000 a month, and we are going to target getting them up to $2,000 a month by doing repairs. That should be a red flag.
Right.
Because now you're like, man, this is above the medium.
Yeah.
And that means the people who you're going to attract, you're also competing for homes. Now, I mean, if this is a 3-bedroom, 2-bath rental in a neighborhood, okay, maybe. But now you got to start paying attention to, well, what are homes selling for, and what are 30-year mortgages, assuming people do a reasonable amount of payment going for. Like, that's now what you're competing against.
Yeah.
But if you're below the medium, you're like, we're gonna be fine. Like, I don't like again, if they're
All
like,
right. That's a super
rents are at
helpful number to
600,
know.
they're going to 1,200. You go, yeah, we should be okay.
How do you figure out what the median income is?
My favorite source is it's dataus.io. Might be datausa.io or usadata.io. It's some combination of that.
Okay.
But essentially, if you can type in that city, so Corvallis, Oregon, employment data or income data, population data, and pick one of those first top blue links.
Interesting.
And you'll get it. But the I should probably look it up. It's the US data IO. That sounds right. It looks really pretty. The way they visualize the data is good. It's all comprehensive. And yeah, so that's
that all
the source
pulled from
I
like
use.
tax information?
Census information primarily.
Census,
yeah, and
yeah.
other and they pull from other sources, but census is the big one.
All right. So, switching now to a different area of growth. We talked about job growth, income growth, now population growth.
Yes,
that is an
population.
indicator of a healthy market.
Yeah.
So, like, you're looking at demographics. Is the under 30 group more than 50%? Like the renters, the primary renters. What does crime rate look like?
Yeah, you want the let's see there. What would you call him? The Rex renter.
Rex renter. Yeah, Rex and Rita renter. What does crime rate look like?
Ryan the renter? I don't know.
How does
I like Rex.
what does access to transportation and amenities look like?
Yeah.
Surrounding neighborhoods. So it's kind of like population growth, but also like what's the demographics of this market? What does it look like? Who's there?
Yeah, exactly.
Mm-hmm. Who's there and what's there?
Yeah, and this is something where I remember I was looking at a deal once where it was in like a workforce type of housing place. Yeah. And the property wasn't in great shape, and they're like, we're gonna make this thing high class, awesome, luxury. I was like, that is not the area at all. Like, who are you attracting for this? Like, there's zero other amenities why someone would want to live here, and there's not like there was a lot of jobs around either. And so, yeah, you just want to make sure that there's a fit. Ideally, population's growing. There's a deal. I would love to buy this deal. The property itself is awesome. I love the property. All the numbers for the property make sense. It would be a fantastic investment. I love it. And it's a super cool building, cool story. There's so much to love about it. As a matter of fact, for the way you could structure the deal, it's almost a nothing down deal for this multi-million-dollar building. It's super, super cool.
But I hear a big but.
It is in a town that is around, I think it's like, is it 20,000, 18,000? Zero growth to some years slightly declining growth.
Yeah.
And the next nearest large town is over 2 hours away.
Ooh. Yeah, well.
And I just I can't bring myself.
You can't
to,
sustain
I love
a business
everything
there.
about this property except for its location. And it's because I see these numbers.
What's the use of the property?
It's mixed use. It's my
Is
dream
it
property.
that it's residential and restaurant?
Yes. No, so it's got offices. It has a ballroom. It has short-term rentals. It's got such cool stuff.
But you don't think the market would sustain it?
Here's the craziest part. This building is like the building when you see pictures of the city. This is the building that they show.
I know what you're talking about now.
It's so cool. It's such a cool building.
Interesting.
But it's in a town that is not growing and isn't very big. The industry, it's diverse, which is nice. And my biggest problem is it's so small. I don't know who I would ever sell this to.
Right.
I would where it's at right now. It's super affordable. The numbers make sense, but I probably have to hold on to it for the rest of my life because I don't think I'd find anyone willing to buy it for a fixed up thing because the city itself isn't that compelling, which is hard. There's a lot of cities in Oregon that are like that where you go, yeah, this property's for a smaller property, sure, who cares? You can get away with it because if you have a single family home, whatever, because there's 13,000 people. There's someone who's going to be looking to buy.
So is it like when this is kind of a tangent on this building, but the original builder of that property was the city booming at one point and they were like, oh yeah, we're going to put in this big building. It's going to be amazing. And it did sustain for a while or?
I don't know. I mean,
somebody just get hosed.
So I think it was I think they were anticipating, this is going to become a place. And it just never did.
It didn't.
Yeah. It's kind of fascinating. I care less about the size. There's some investors where, they're like, I just do big cities, which
Sure.
I get it. There's so much diversity. There's always
Yeah.
going to be a buyer or seller.
Yep.
So like it makes sense.
It's a bigger pool. Yeah.
But for me, I'm more in the like what's growing. So like when we were doing a place in Astoria, again, it's a smaller place, but less than an hour drive. You were in Portland, and it was growing. The growth rate on it was crazy, and they were like housing shortages were a problem, and so that same city. There was another building. It's an interesting project where they had started a development project, ran out of money, and it's just half done. And they're practically giving away this property. And I'm just like, they're so interesting to me. It's so cool. I mean, it's like $100,000 for something that can have 15 units.
Whoa.
Right?
Yeah.
Now, there's still $1 million
good.
worth of work that needs to happen on it to get it finished over the line. But the property itself is practically free. And I'm just like, this is... like the numbers make sense. It's such a cool deal, but there's no construction people in the area because it's such a small town. Like there's not really anyone to take off the project, so I have to figure that out, which is another problem that you got to think through. There's like one, maybe two property managers in the city because it's small.
Yeah.
And
just
so this is
make sure
why
that's
like
hard.
these are really important things. Again, size, it's important, and you can make a bunch of assumptions if it's big, but you really want to care about what's the population doing? Is it growing? Is it getting bigger? Which that means, because it's all about supply and demand, right? So if demand is growing, that means there's a good chance that there will be demand for the supply and prices will continue to go up. If income is going up, that means people will have more money. They'll be willing to pay more in rent in the future. It's not necessarily about today, but it's like if I hold on to this thing for 10 years, what's it going to look like 10 years from now when I want to sell it?
Right.
And so, that's starting market's important.
Yeah. So this last section of the surrounding market is all about like the cap rate. So give us a quick rundown of like the market cap rate, and then I'll kind of read some of these like supporting questions that go with it.
Yeah, so the cap rate is short for capitalization rate, and it's simply a ratio of the net operating income divided by the price. So the net operating income is simply income minus operating expenses. So it doesn't include big capital improvements. If someone makes a new roof, that's not part of the number. But essentially, it's saying it gives you a way to compare the price of properties for the amount of income that this thing's going to produce before you take into account financing.
Okay.
And so in theory, things with a lower cap rate, this is counterintuitive, but things with a lower cap rate mean that you're paying more for the same amount of income. So you don't like that as a buyer. As a seller, you love it.
Sure.
The higher the cap rate, the more you're like, oh, okay, I get to pay less for the revenue. In my opinion, they've got the ratio upside down, but whatever. I didn't invent it, so I don't get to say.
That's how it works.
It's inverse of what you would think it would be. A cap rate of about 8% is pretty close to your 1% rule.
Okay.
That helps you.
Yeah. All right.
Right now, cap rates in Oregon are in that like 5.5%.
That's what I was going to say. I was like, aren't cap rates closer to like 5 or 6?
Yeah, and in some places, and so that's why there's some deals that we've looked at where it's like a cap rate of 3. I was like, oh man, but it's because they're selling it on future cash flows. And so the current ones are horrible, but they get it. There's super easy upside on it.
Yeah.
But that's what it is. And so the cap rate's important because you look at the sales of other properties. That's again another problem with a small place. There's just not a lot of comps.
Yeah.
But you can say, yeah, here's what the NOI was. Here's what it was selling for. You get a bunch of those. You can kind of get what an average cap rate is for the area. And that's not as important for when you're buying, but it's really important for when you're selling. Okay. Because that's how other people value.
That's how you,
Yeah, that's how
they
you
look
figure
around
out, like,
and then
here's
they're
what I
like,
think it'll be worth.
well.
Or at least what I do is I will say, because I am almost like a half care, but I will say, here's what I'm buying it at. And then I'm going to assume, and so given what I just said, I assume that the cap rate slowly ticks up over time. So it means people are willing to pay less and less for the same cash flow. So it means I really need to increase the NOI by increasing income, minimizing expenses to really see the value in that property. Because if I can do that, yes, that's a great deal.
Okay.
But yeah, looking at the market kind of gives you an idea for, all right, what should these things be trading at?
Okay. That's super helpful. And then some of these supporting questions then make a ton of sense. To figure out that market cap rate or like surrounding parameters to define like how the market is doing, you look at sales comps, rental comps by the same type of property, and then current and historical vacancy rates, occupancy, and changes in it, and is it going up? Is it going down?
And as a passive investor, you don't really need to find all of this information.
Right.
You just want to make sure that the sponsor has found all of that information and can share it with you.
Yeah.
Because those are harder pieces of data to find and usually require a really expensive subscription to get access to that data.
Sure. But if you know what the sponsor is looking for, you can kind of say, have you looked at some of these different areas?
Yeah. If you go to your sponsor and you're like, hey, what is the cap rate for this area? And they're like,
I don't
what?
know.
Yeah, that's a problem. If it's a smaller place, they might be like, man, there just aren't a lot to go off of, so I think it's in this range. We'll see. If you ask them, like, what are the average rents for the area? They're like, I don't know. You're like, come on, dude. Rentometer.com should be easy enough.
Yeah.
And so, like, those are the kind of things. You just want to make sure your sponsor knows what they're getting into, and ultimately what they're projecting is in line with the market. That, they're not, because I've seen that too, where people come in and their rent numbers are higher than the market. Like, well, yeah, because we're making all the units new. Right?
But if the market doesn't support it.
Well, I mean, it's an average, so there are some that are higher, and so I get it, but like
it's more risky.
You really got to make that case for me if that's the case. Yeah. And for me, if you say, yeah, we're making new units, but we're underwriting this, making the assumption that we're only going to get average, but we're pretty sure we're going to get higher, I go, cool, you're being conservative in the way that you should be conservative.
Yeah.
So
Makes sense.
Gotta watch for it. Yeah.
Cool. Well, that is how you define the surrounding market.
Yeah. So hopefully that makes sense and it's not too hard.
Yeah.
It's usually a smaller part of the of whatever deck or whatever presentation someone's showing you, because it's important to touch on it. Ultimately the property needs to make sense, but I think it's just important. It's the high tide will raise all boats. It just makes things easier.
Yeah.
And why not?
I don't know if you explicitly said this. I think you did. But just to reiterate, the market is not like the market for the world or for the U.S. It's like there are different markets.
Yes, there are thousands of markets.
Within different cities. And
I would say it's within that 45-minute commute is the market.
Yeah.
Yeah. Usually it's that specific city that you're looking at.
Yeah.
That's how I would define it.
It's more granular.
Yeah. There you go.
There you go.
Cool. Awesome. And hopefully you found that helpful. And if you enjoy this podcast, we would love it if you left either a rating or review, wherever it is that you listen. And if you are interested in investing with us, we would love for you to check us out at furlo.com. And so with that, I want to say thanks for listening. Have a great day.